Morning all, how are we all doing? Sorry I'm late, I'm always late on a Friday, Thursday even. It's Thursday. Sorry. Just got back from the gym as usual. Right, one sec. I'll be there in a minute. Okay, how are we all doing? Morning Kennelly, Steve, John, Steve, another one. XRUpdate.news, how are you doing? Amy, Andres, Virginia, Danny, Pip, Neo. Oh, Wet Hair Thursday already. It is. It's time. Morning, Burke. Hello. How are we doing? Right. Morning, Peter. So, my friend Nirav came back this morning. Look, I haven't seen him for ages. I wonder if he's got any useless retail candlesticks I can borrow. Hang on a minute. Let's find out. Ooh, Thursday, 6th of July. He's doing something. Let's see if we get any useless retail candlesticks. Come on, Nirav, get on with it. No, doesn't look like we've got any useless retail candlesticks this morning. No, give up. Anyway, haven't seen Nirav for ages. Sorry. Anyway, morning, Enriquez. Morning, Christian. I'm not going to say anything. Right, FOMC last night. What a letdown that was. Nothing happened, basically. We didn't get anything out of the report last night. So some participants indicated they favoured or could have supported, maybe, might happen. There's a 50-50 chance something in the future is going to happen. Raising the target rate 25 basis points. Thanks for that. You've already said you're going to go up by 0.5. So anyway, Fed staff saw a mild recession likely, same as in May. Heard it all before. That's it. There's nothing came out of the Fed last night at all. Bullish, bearish, indifferent, anything. So nothing's happened basically with the thingy. Why is he making dough? I don't know. Why is he making dough? Who's making dough? You talking about me or are you talking about Nirav? Morning, Ladder. Morning, Stefan. German industrial orders came out this morning. So no news, basically, overnight. We've had the trade balance this morning for the Aussie, which was good. We've got day 2 of OPEC today. Nothing much came out of OPEC yesterday with oil. How long we got to the open? 3 minutes. So yeah, nothing much came out of OPEC yesterday with oil. We did have a bull day. We did break that high. So basically the Saudis, the long and short of yesterday was the Saudis said they will support anything necessary to keep oil prices stable, i.e. going up, because they need to make money. So if anything, it was slightly bullish in the fact that the Saudis will cooperate with oil increases. The trend line broke. Yeah, there you go. So potential for us to challenge obviously there or there today. So last month's high is on the cards today. That's within 125 ADR. Previous high there is 150 ADR. So if we get anything out of OPEC today, might get some more movement on oil. No, waving his hands around like he's making bread. Oh, I see. I don't know. I give up with Nirav. So today we've got unemployment claims at 1:30, and then at 3 o'clock we've got services PMIs. So big day for the US today. The unemployment claims give us a real good indication as to what's going to happen with the real thing tomorrow, which is unemployment rates. That's what drives the market. So if this comes out as a positive number today, the unemployment rate could well be going up tomorrow. That's going to be bearish for the US. If we get a lower unemployment claims today, means we might have either a stable or dropping unemployment rate, which will be bullish US. So we will wait and see. We've got the same with the Canadians yesterday. Tomorrow we got the unemployment rate tomorrow for the CAD. So US dollar CAD's got a massive day tomorrow, but we've got a big day today for the US potentially as well. So all good this afternoon. 1:15 for a non-farm employment. Unemployment claims then at 1:30, and then 3 o'clock with the PMIs. So we'll be a busy afternoon this afternoon. So there's your news all covered. overnight, lots of movement on the yens. So big moves started on the yens, although Aussie dollar yen seems to be completely retracing all of its overnight activity. So that one's on the move to the upside. So all the yens basically had a lovely collapse. Got out of a couple this morning. So CAD yen took off that aggressive drawdown control position on the CAD yen this morning. Did a little DD control. I'm going to wait because we've hit ADR basically on CAD yen. I'm going to wait until this afternoon before I make a decision as to whether to do any more drawdown control on these. Because if we do get negative US movement this afternoon, we should get negative CAD, which means we'll get a further drop on this one. It's very close to break even now anyway, so I've banked 11% off of it this morning. Swiss yen, same thing, started to drop. We've got a reversal alert on that after 4 days. Finally, we've broken structure to the downside. Euro yen, taken one off of that this morning as well. That's come down very nicely. The EA has just taken a buy on this. I reset the EA basically, so I'm going to have to deal with the rest of it manually. I've adjusted this account basically. Pound yen, that started to drop, and US dollar yen as well. New Zealand dollar yen is obviously pushing back up with the Aussie. US dollar yen nicely down in profit at ADR. So quite a few ADRs there on the yens, 3 of them so far this morning. We'll look at those in a minute. Let's just look at the DAX for the morning's open. So big gap down on the, big gap down on the DAX today. I'm not going to get the pre-market on. Pre-market's too close to the high. So if you've taken the pre-market, you'll be long on that already. If you got it on. So big gap target. So we've got this gap target there from Tuesday into Wednesday. We've also got the orphaned gap potentially from a few weeks ago up there, which we haven't hit yet. That one got filled yesterday. We filled all these ones last week. So we are leaving targets in place today. So downside target today is going to be last month's low, previous week's low, which is roughly ADR. So if we get a shoot down to ADR today, that would be a beautiful buy at ADR because we'll have 2 gap fills to play. And obviously the big one up there later. So, yeah, we'll see. But yeah, that pre-market, couldn't get into that this morning. Look at the difference in price action between, this is Robo Forex. Look at that wick on that candle there. And then look at E8. Yeah, no wick at all. Totally different price action. Totally different results. This is all, I keep saying it. Whatever you get, when you're testing anything in the strategy tester, your broker data is not going to be the same. So, for example, this EA variation that I've got running here of the opening range breakout EA uses the distance between the close and the high of the range as a decision-making process. E8, it said, nope, I can't do that because I'm closing at the highs. Robo Forex, it would have said, yeah, no problem. Look at all the distance I've got there. And it would have gone long. So on this account, you'd be long and stopped out. On E8, you won't have taken a trade. How, tiny, when you're trading 5-minute time frames, tiny little things like that make all the difference to your results. Difference between getting spread, between getting into trades, out of trades, getting limit orders placed or not. There's so much when you're trading volatile instruments. What's that yellow line I've got there? Okay, so we're tapping straight into this low. Can't see, my head's in the way. So we're tapping straight into this low here. Respected it multiple times, this level, multiple times. So watch that level for a bounce. Other than that, as I said, we're looking at ADR. So the weekly, monthly low area down here at ADR. If it flushes. So yeah, so there's DAX targets today. Looks like we're going short. That's a big opening range today as well. KB, is the new Breakout EA going to be an update? No, it's a totally different. I don't even know if I'm going to release it as a product, because it's just something I'm testing. So I don't know. What I'm trying to do, excuse me, I'm trying to replicate myself as much as I possibly can in an EA. So what I look for, what I like to do, I'm putting, based on my experience trading the opening range breakouts and breakouts in general over the years, basically, but I'm trying to put together the ultimate index strategy, if you like, rules. So if this happens, don't do that. If that happens, do this. And I'm trying to build basically a set of rules. So when you're looking at the open of the indices, for example, I'm looking at the 5-minute, the 10-minute, the 15-minute pre-market ranges, because I know they're good breakouts. But they're only good breakouts if they meet certain criteria, i.e. they're not too big, they're not too small. So it's a bit like the Goldilocks zone, yeah? It's got to be just right. When you get it just right, the risk reward is there. It can reach within an ADR to hit 1.5 or 2R very easily. There's lots of things that you need to take into account. When the initial 5-minute range goes in, like this, for example, if it's too big, I'm not going to take it. So the maximum range is going to be 329 or 33 points. Yeah, that's 51 points. That's too much. Yeah. So I'm not going to take an opening range breakout on that today. Yeah. The half of an ADR on this is 71. This has just done 51 in one candle. Yeah. It's exhausted. It's done nearly half of its average daily range in 5 minutes. The chances of this having a load of momentum left now is low. So today, I'm not going to bother taking it. Some days it will just fly. You know, this will jump down to ADR today and I'll be going, oh, I wish I'd have taken it. But a lot of days, what you will find is it will go like that for the rest of the day, because it's knackered, it's done it. So you don't trade those days. So I'm putting together rules. So for example, as you can see here, we didn't take the pre-market because the range wasn't right. It was too close to the high there. So you won't get the limit order on and you're likely to get slipped, which will hurt your overall results. The range is too high. So the next rule I'm going to look for now is, right, let's wait for an inside bar breakout. Yeah. So next thing that will happen is the EA will then monitor for inside bar breakouts. However, if there is a massive gap to be filled, we'll pay attention to that as well. So I'm going to put a set of rules together for gap plays. I'm going to put a set of rules together for inside bar breakouts, but this will all only happen if the P&L is negative. So yesterday made $550 on this account, or pounds rather. This is a pound account. So if we're in positive balance, then we'll stop taking inside bars because we've made our money for the session. Yeah. So it's putting together kind of my ideal, if this happens, then that scenario, which is what I'm trying to build. But it's not going to be something I will release if it's no edge. Yeah. The opening range breakout EA as it stands has a beautiful edge. It works. If you've taken the pre-market 5 or 15 today, you've stopped out on your long, you are now short. If it moves 1.5R down, tick, done. Yeah, it works. I know it. We've tested it. Long term, it's fantastic. So, but if what I build doesn't give me a higher return on drawdown or a nicer equity curve overall than the original product, there's no point in me setting up a new product. This one is fine and it works. So, it's just I built it to do analysis. So we've broken out. So it looks like we're going to do and challenge last month's low. So I built it to do analysis, to gather data. So this version of the EA also exports CSV files. So when I run it through the strategy tester, I can export lots of data. So every day I can export what was the range, what happened after the range, how far did it move in the first hour and a half, what was the high of the session. So it's exporting lots of data that I can use to crunch to see if there are further edges to expose. So For example, today, if it breaks and hits ADR today, and there is a gap to the opposite side from the last 3 days, what happened at that bounce point? Which is, if you look at what happened last week, the reason we said last week, here, this looks like a beautiful long, was because we had a down day, we pushed down, we double bottomed, we rallied off. I said, this looks like a beautiful buy to come and fill these gaps. Bang. I know this happens. I've seen it happen day after day after year after year after week after week. It just happens all the time. So the rule will be, if it hits ADR today and previous week's or previous month's low and bull candle on the last hour and gap above, go long, stop under low, hold for a 2R, that sort of stuff. So I'm trying to build the ultimate trader, if you like, in an EA. Whether or not it'll work or not, I don't know. It's an experiment. But we'll see. So breakout to the downside, you've got, if you took the pre-market, outro in here, outro, did you get the pre-market? So if you took the pre-market 5, you are short, and I'm pretty sure you've got a target there. So pre-market 5, you've got 1.5R, almost 2R. Pre-market 15, you're 1R at the moment. So stop out on the long, flip short. Depending whether you took the pre-market 5 or 15, you're either 1 or 1.5R. So there you go. That's profit. It's profitable. Done it. It's done its money today. Depending on which you took, obviously, but you know, this is not over. So I would be looking for at least another 58 points out of that today. ADR. You know, and this is a prime example of why I keep saying with the opening range strategy, rules, some days, you know, today, I wish I'd have taken it. The EA, but the data says when that happens, it doesn't help you. It's negative overall long term. So don't take it. Some days, yeah, it will run and you'll go, oh God, I wish I'd have taken it. But the days that you don't take it because the rule says don't take it and it goes into rotation, you're like, I knew that was going to happen. You can't tell what's going to happen, can you? You don't know what the future holds. Anyway, so that one's done for the day. Got that away. Right, so let's look at these ADRs. Let me just catch up on the chat. What do you think about Aussie New Zealand? We're stuck at the minute. Really nice wicks to the downside at the moment. A lot of rejection there. I'm buying that up into propulsion. You've probably just had a reverse alert on a 5-minute. Yeah. So you've just had a reverse alert and a retest on the 5-minute. Your W pattern reversal's in. And it's just retested again. So it's like a good buy. It's not extended at all at the moment on the 4, or well, it's just about, it is extended on the 4 hour actually. It's down below the 25. But we looked at this one yesterday. We had a 38 pullback on that leg. So I think potentially we're coming back down to retest this interest rate decision for the New Zealand dollar. The Aussies just had its interest rates come out as expected, but not increased, and their inflation is very, very high. So the rate increase, I think, is probably bearish for the Aussie dollar. So I'd probably be looking for that kind of movement. Yeah, don't know. At the moment, not sure. It is extended though. Aussie New Zealand on the 4 hour. You catch the move on the NAS yesterday? I didn't, no. I did catch the Dow. So that, no, I didn't. I got the Dow and the S&P yesterday, so I got that. And I've got the Dow. Oh, wrong one. Oh yeah, anyway, you can see I've got got those two. I didn't get the NASDAQ. And again, a good example, I didn't take the NASDAQ yesterday because if you look at the and again, I'm running this new version at the moment, but if you look at the range there, it was absolutely tiny. The 15-minute range was too small yesterday. So that range there was only sorry, 9 points. So the minimum range, well, the minimum range that I've tested that is reliable, I'm trying to see it, is 16. So 16 points. Anything lower than 16 points, you get a majority of them being whipsaws, double-ended stop outs. So I didn't take that yesterday because it was too tight. And this is a prime example of, oh my God, I wish I had. Look at the risk reward on it. I haven't got a risk reward on this one. Let me put it on over here. Yeah. 7. I mean, it was 10R basically. If you held it, I mean, if you held it, it was 10R. But if you just took the first 5-minute candle and then closed out the first 5 minute, you got a 3R. If you waited for the second candle bullish, you took a 4R. If you waited for the third candle bullish, you got a 6.5R. There was absolutely nothing on any of those candles that ever told you get out of this trade. It just went parabolic, parabolic, parabolic. That was your first signal, that candle there, to say, hang on a minute, it looks like the sellers are coming in. So you would have taken a 6R, wouldn't you? I didn't, because the conditions weren't right. It's, you know, overall, but, you know, some days you're just going to miss those trades. And I missed them yesterday, but still got paid. But yeah, that was a beauty. Morning, Gable. Which broker datas you use for back testing? I use Dukascopy. So all my back testing is done with Tick Data Suite. And I used Dukascopy. I never know if it's Dukascopy or Dukascopy. But I use them. Very, very good, accurate data they provide. They're quite well known for their data accuracy. Peter, and is it still very low volume across indices? Did you ask something else, Peter, that I've missed? No. And is it still very low volume across indices? No. ADR overall is down at the moment. So the volatility, you can see the volatility is down overall at the moment. So if you look at the ADRs, the ADR is 20 points at the moment on the NASDAQ. Quite often, NASDAQ in high volatility periods is being sort of 35-ish plus. So, which does indicate that we're entering back into a bull calm regime. So we've been, for the last year, basically, as you can see, we've been bear volatile, which means that we've got a bear market, and bear markets have higher volatility, higher ADRs. We are entering back into a bull market, it looks like, and as you can see, the candlesticks get smaller. So if you look at the S&P, S&P is a really good gauge for this. So when you look at what we call a bull calm regime here, your candlesticks are like, that's 30. That little one there is 34. We've got a biggish one there, which is 41. We've got a fairly big candle there, which is 60 odd. Yeah, most of these candles are somewhere between 30 to 60. Yeah, that's a bull calm market. Then we enter into a bear volatile market. Your candles are 100. A smallish candle is 60. Yeah, big candle there, 150. 140. So the the ATR basically doubles in a bear market. There's a lot more volatility. We are looking like we're going back into a bull calm market. But you look at the bull moves here. We got candles in this bull run here, which are still up in the 200s, yeah, 90, 150. Yeah, we've got big old candles in it, 160 odd. Now, if you look at it, we are entering a little bit more back into the 30s, the 40s, 36, biggish one there, 40. There's a big candle there, 90. So since I would say here, March, April, May, and June, we've started to get a little bit more back into that bull calm market, which would indicate that we're entering back into a bull market again. However, the US has announced that they think they are going to go into recession towards the end of this year. And if that happens, we're not necessarily going to remain in the bull market. We might go back into a bear market again. So it's a very, very difficult time. But periods of lower volatility mean the market movement obviously is smaller and lighter. And as a trader, the only way you can make money is when markets move. So when markets don't move as much, you can't make as much money. Therefore, you have to over leverage, which means you have to get your accuracy higher. So it becomes a lot more difficult to scalp in low volume markets, and they are starting to calm down. That doesn't mean they're going to. You look at things like the Dow, yeah, we are struggling. We're not going back into a bull market. Yeah, we thought we were going back into a bull market here. We pulled back. We thought we were going to rally for a new high. We didn't. We thought we were going to rally for a new high. We went back into a bear run. We thought we were going to come back up and retest those highs. We didn't. We flagged. We came up. We retested those highs. We've rejected. We've come up. We've put in a new lower high, potentially to put in a new lower low. So the market is not going back into a bull market yet. It's an indecision. So difficult to tell. But volatility is dropping, which isn't great, but nothing you can do about it. You have to adapt. Do you take volume into consideration for opening rules? No. I don't take volume into account, no, because you can't trade volume on brokers, on CFD brokers. There is no centralized volume for CFDs. There is centralized volume for futures, but there's no centralized volume. So this when you put this thing on your chart, yeah, it's utterly useless. So many people contact me all the time about volume. Why don't you use volume? Everybody uses volume in futures. Yeah, of course you do in futures. But look at this. What is that? That is the number of CFD, the number of contract for differences executed on my broker, Forex. What's that got to do with anything? What my broker, how busy my broker is at the open has got nothing to do with what's going to happen to this marketplace. If you're on IC markets, you will have a different volume candle. If you're on my Forex funds, you'll have a different volume candle. If you're on any broker, you'll have a different volume candle because this volume here is the volume from your broker. If you're using a broker that's got 100 clients, what that has to do with anything is nothing, is it? Forex's volume doesn't mean the market is going to push or pull. That means Forex has had some orders executed on it. If you're in the futures market, volume profile, incredibly important. In CFDs, doesn't mean anything. So useless. But the size of the movement is important. And that is exactly what this version of the EA is testing. Yeah, this version of the EA, you probably can't read it, but this is all this data is being gathered. So what is the range of the 5-minute candle? On average, when that range is, and this is all being measured as a percentage of the average daily range as well. So this is all completely dynamic. So regardless of whether we're in a bull calm, bear volatile, or a neutral marketplace, the average daily range is the average daily range. This is measuring the open range based on a calculation of the average daily range of the last 10 days. So it's saying if the market has a quiet open, regardless of how volatile it is, if it's a quiet open, what happens? If it's a big bullish open, what happens? Yeah. So all the data is being gathered relative to the average daily range of the instrument. So it's all accurate to that instrument, which it has to be, because it's absolutely useless, isn't it? If I say, if we have a range of 30 pips, for example, or 30 points, and we use that in a bull calm market, and then we use it in a bear volatile market, that 30 pips is a totally different thing to that 30 pips. This thing moves 300 a day. This thing moves 100 a day. So that's 10% of that. It's 33% of that. You've got to use the average daily range. You've got to use the average measurements. So that's what that's doing. Stop loss and break even on the short. Oh, yes. Well, one stop out, one break even isn't the end of the world. You should have been able to get a, it depends what you took, whether you took the 15 or the 5, doesn't it? But yeah, tricky one. Well, at the open, we know there's a ton of volume. Yeah, there's a ton of, we know there's a load of volume. That's the whole purpose of the strategy, isn't it? Do you recommend Tick Data Suite or Quant Data Manager? I've never heard of Quant Data Manager, so I can only recommend Tick Data Suite because that's what I use. The data will come, regardless of what system you use for your data, the data will come from major brokers. So within Tick Data Suite, for example, you can choose from the major brokers, which is Ducoscopy, Alpari, FXCM, FX Open, and DARWINX. So all these brokers, basically, the reason these brokers are on the list is because these are the biggest, longest established brokers. So Ducoscopy have been around literally since retail trading started. Alpari, the same. They've been around for decades. So the reason these guys are on these lists is because their data is accurate and they have the most. So these are the guys that you pick from. It doesn't matter which one you pick, really. I use them because I've always used them and I've never had a problem. So, but who you use, and if you go to any other data supplier, you will find they will all be sourcing data from these guys usually, whether they tell you or not, but they will be coming from one of these main sources. If you're an account holder with DARWINX, you can download all their data for free. You just got to find a way to squeeze it into MT4. The reason I use Tick Data Suite is, as you can see, it fully integrates automatically into MT4. So literally, I install Tick Data Suite. When I launch my MT4, I have Tick Data there. With Quant Data Manager, I've never heard of it, but if it doesn't plug straight into MT4 hassle-free, it's a lot more hassle. So I don't know. I've never used it. So right, so we're back in the range at the moment on the NASDAQ. The DAX, rather. Right. Morning, Tammy. Think I got out for 8R outro. Oh, what, yesterday on the NASDAQ? Well done. Good job. Yeah, I got a decent risk reward on all the trades yesterday. It's a good day yesterday. Payday yesterday. Been catching up after the lives lately. Continually learning before I set up the EA to trade soon. Cool. Is Forex futures volume of any use? If you're trading futures, yeah. I've never traded FX futures. I have. That's a lie. I've traded 6E and I've traded the pound and the euro basically, and never. It's too slow. Better off trading CFDs, really, I think. No, this isn't a good question, but what is your preferred strategy for challenges, ORB or ADR? Are there any other stop loss strategies you teach which aren't listed? ORB, it depends. with every strategy you do on prop, it depends on when you take it. I always say this, yeah. ADR reversals are brilliant. So CAD yen, for example. Yeah. We had an ADR there this morning. Yeah, we bounced off of ADR. It's pushed down again. So you've got a potential chance for a bounce here. Yeah. It will either work or it won't. You will have days where you'll get 7 or 8 ADRs. You'll get a reversal on every single one of them, and it will just go half an ADR, and you will bank 8%, just like that. You'll have days where every ADR will go into an accumulation and rally back down the next day, and every single one will lose. You'll have opening range breakouts, which are hideous whipsaws. You'll have opening range breakouts like yesterday's NASDAQ we just looked at, which go 8R. If you're risking 1%, yeah, and you get an 8R, that's a pass on a prop firm in one day, in one session. There is no strategy that is good, bad, better, indifferent. They will all work and they will all fail depending on the market conditions on the day that you start trading them. Yeah. If you take a proper valuation yesterday, if you started a proper valuation yesterday, you're sitting on a massive ton of profit right now. If you started a proper valuation the day before on the DAX, for example, you got chopped to bits. Trying to find the DAX. There you go. Yeah. If you started a valuation on Monday, unlucky. You know, it's totally down to the market. Yeah. That day. We had a nice rally up at the open. Made a nice bit of money. Did the gap fill. Fantastic. If you'd have taken an inside bar break up there, wow, what a beautiful day that was. But you know, there's no strategy that's any better than any other. Everything runs on support and resistance. So the strategies that I have developed over the years are all based on what happens historically happening again. And it will happen again. Support resistance bounces happen all the time. Whether they happen when you're doing your evaluation, don't know. So the best thing I would say is to start 3 evaluations. Yeah, kick one off on Monday, one off on Wednesday, one off on Friday, using exactly the same strategy. One of those will pass because it will depend on when you get the lucky run. And it literally is that simple. As long as you've got a positive risk reward, yeah, like with the DAX this morning, if you took the 5-minute pre-market on the DAX this morning with a positive risk reward, you made money. Yeah. Yeah. You went long, you stopped out. You went short, you made 1.5 R. Pick. There's a half R. Done. Well done. As long as you've got positive risk reward, every strategy works. But it's people aren't able to do that. They're like, oh, I only made half R. Maybe I'll take a, this looks like it's going bullish. Maybe I'll take a quick break of that high. Oh, now I'm sitting in drawdown. Oh, no, I've stopped out for another. So now I'm minus 0.5 R. Yeah. People overtrade. That's why. And this is partly why I developed EAs, because you trade with the opening range breakout EA and don't touch it, the edge will just play out. It's when you start touching and interfering with stuff, but you do sometimes need to do that, obviously. So, but ADRs are, you know, ADRs, you have to use your head with ADRs as well. Yeah. Look at the CAD yen. Look at all the yen pairs this morning collapsing. So I've been saying for weeks, I'm expecting some strong movement on the yen. Strong movement is starting on the yen. Do you think this is the best day to take ADR reversals on the yen after a strong 2-day push, which we've been expecting for weeks? Probably not best to take those ADRs today, is it? But if you're using the market reverse alerts EA, it will do as it's told. It will take these ADRs for you today, and they will probably go into drawdown, and you might need to hold on to them for a few days, but they might play out. Support resistance propulsion indicator. Yeah. Take the support resistance bounces. Yeah, there's a beautiful one yesterday. You got half an ADR out of it. I don't know. Can't really answer that question. You know, there's no. I don't believe there's a strategy out there that is any better or worse for prop. all strategies have a high strike rate and a high failure rate at points. Yeah, all P&Ls with all strategies have times where they go like that, times where they go like that, and times where they go like that. If you start an evaluation there, you'll get frustrated and blow it. If you start a valuation there, you'll fail it. If you start an evaluation there, you'll pass it. It's the same strategy. You just have to trade. And this is why I position trade, because that takes the timing element out of it. Yeah, I got in short on this trade here. I was wrong. I've been wrong for a couple of weeks, sitting there for a couple of weeks waiting for this move to happen. I've just banked 11% this morning and I'm sitting at break even. Yeah, timing is the thing that kills traders. If you take timing out of the equation, you will make money. You can't do that with prop though, because prop doesn't allow it. Because prop knows that that's how people in banks make money. Therefore, if they let you do that, they lose their edge, which is you failing and taking evaluations. So they're not going to let you trade the way that's profitable, are they? Because if they do that, they lose their income. Yeah. My Forex funds make over 20 million a month in evaluation fees. Yeah. If they took away the the need for a stop loss and the need for a drawdown limit to be 5% a day, people would be able to start position trading. If they started position trading, if I could position trade with a sort of 15-20% loss limit on my account, I would have loads and loads of funded accounts I'd be able to hold on for a long time. And I'd only ever pay for like 3 or 4 evaluations a year instead of like 5 or 6 a month. Because that's the way to make money, isn't it? So, but stop loss based strategies, obviously. Yeah, ADR works well. ORB works fantastically well at points. Any support resistance strategy. Long now, euro, US dollar. Look at that. Yeah, that's the reason these lines are on the chart. That's the reason I use weekly and monthly support resistance levels. That was the low from 2 weeks ago. We pushed up and made a high. We came down, we hit the high from 2 weeks ago, last week, and we bounced. We put in a new low for last week. We came down, we hit the low from last week and the previous weeks, which was a previous accumulation break, propulsion gap, which we bounced out of twice, and we bounced. Go long here, put your stop under there, and make sure you've got a 1.5R plus PP. Doesn't get any simpler than that. You can't get any simpler than using support resistance propulsion indicator, literally just to take every bounce you see at support and resistance. If you can get 50% of them with a 1.5R, you're going to pass a prop valuation. If you don't get a losing run of 5 to 10 trades in a row, which you will, because there is no way this strategy is going to have a period where it's not going to have a losing run. And this is what the prop firms know. Yeah. You get past phase 1, excellent. You get past phase 2, excellent. You get your funded account. Oh, you've had a lucky couple of weeks. What do you think is going to happen when you get your funded account? You're going to hit that losing run. You fail, back to square one, start again. That's the cycle. They know that. They know that there isn't a trader out there that doesn't have a losing month. I had a losing month last month. I haven't had a losing month for months, 6 months. I had one last month. Everybody gets them. Tom Hergaard, if anybody's following Tom, Trader Tom, fantastic scalper. Look at his results over the last 3 months. Terrible. Yeah. He made over 2 million quid last year. He's lost a fortune in the last couple of months. He's making it back now, but he has losing months. £100,000 plus losing months because his strategy is great. It has a long-term edge, but it does not win all the time. If you're taking a proper valuation, you've been following Trader Tom for the last 2 months, you spent a fortune on evaluations. You haven't hit anything because it doesn't work that way. That's not trading. That's not real life. Unfortunately, don't want to burst anybody's bubbles. Let's think positive. Yen's coming down, which is good. Anyway, so yeah, support resistance, propulsion, use those support resistance lines, ADR reversals, RSI extensions. If you look at the hourly RSI extensions, if you just take every RSI extension on the hourly chart above the 80 level. Yeah. So you have you had maybe one there. I'd like to say yes, but maybe not. You had one there, definitely. Right? If you only took 80 RSI extensions with a half ADR stop loss and a 3/4 ADR to 1 ADR TP, you would have had 100% strike rate on the euro US dollar in the last 2 months. You'd have only taken 2 trades, but it's 100% strike rate. That's a strategy, yeah? So just use half an ADR as a stop loss and target 3/4 of an ADR to 1 ADR as a TP. So that is a 1.5 to 2R return with 100% strike rate on the euro US dollar. New Zealand dollar CAD. You had an entry there, which you'd have stopped out on. You had an entry there, which would have TP'd. You had an entry there, which would have stopped out. You had an entry, no. So you had a 33% strike. No, sorry, you had, a 33% strike rate there. So you had a 2R, -1, -1. Break even. Yeah, so you break even on the New Zealand dollar. I'm just making up a strategy as I go. Yeah, I'm just showing how important risk reward is if you're going to use a stop loss. You had a short there with half an ADR. 22. You wouldn't have stopped out. I'm not being accurate with this, but you had a 50-point move to the downside. It's 44 is ADR. So you had a short there, that one. You had a long here, which stopped out. You had a long here, which stopped out. You had a long here, which would have worked. So they cancel each other out. Yeah. So there you go. You are. Yeah. This is obviously a simple strategy. Doesn't matter how you get in. I'm just proving the point that all strategies are not going to work. If you use any strategy, you will have a losing run. This is a good one for spouses to listen to. Yeah. Why have you? What? You're not doing that stupid trading gambling thing again, are you? No. It's all calculated. It's all to do with maths, love. Just the way it works. Trading. But this is why it doesn't work with 90. And this is what the bootcamp is all about. Everything in the bootcamp is all about exactly what we're talking about here. Why people fail. And this shows you why you fail. And it teaches you how not to fail, basically, because it's all to do with system hopping. There's nothing wrong with any strategy out there. All strategies work. All strategies fail. The problem is the stop loss. That's the thing that stops you making money. And it doesn't stop you making money because you get stopped out. That's part of the problem. It stops you making money because when you get stopped out, you lose faith in the strategy. When you lose faith in the strategy, you system hop. And you end up system hopping your entire life until you get to 60 years old and go, trading doesn't work. It does work. Every single one of these system hops was a perfectly good strategy. You just didn't give it 6 months for the edge to play out. So if you remove the stop loss from the next strategy you use, that strategy will just work because you won't get stopped out. And it will just, when the market movement, market structure happens, you'll just make profit. That's how the banks do it. That's how I do it. That's how most successful traders I know do it. You don't let it happen. If you follow Tom Hugard, what do you think about his school run and advanced school run strategy? Do you think it's worth to build into an EA? I've built the EA, it doesn't work. You can do it. Test it yourself, Peter. The opening range breakout strategy, the opening range breakout EA, you can set up the school run strategy in here. So the school run strategy is just a time period break. So just set up the school run strategy. using the right time frames, which you'll know because it's in his document. I haven't got it. It's in his Telegram group. And you can use the opening range breakout to go and test that strategy. Not profitable. Not in my testing, right? But the thing with this is the difference between an EA and a trader. If you follow Tom, I don't follow Tom, obviously. He does live rooms and stuff. I don't do them because I'm here, I'm trading. So I don't follow anything he does. I read his documents every now and again when he releases them. But the difference you'll see with Tom is when he takes a trade, I don't know where the advanced school run strategy is here. So let's take, that's the open. So the advanced school run strategy will be trading that break, yeah? I think it's second 15 minutes. The difference between Tom and an EA is Tom will take a trade there. He won't use a stop there. He'll use a stop in a place that's logical. Might be 30 points, might be 40 points. If the trade starts to work and he sees a high break and he sees a price action pattern that he likes, he'll add to the trade and then he'll get out when he's got enough money in his bank account. You cannot teach an EA all of the intricacies of understanding price action and following the market. You can't. There's too many of them. Whether there's a gap there or not plays. You could program an EA. Obviously, you would need probably 6 to 7 years of your life to figure out how it works, first of all, and then program it and then test it and then get it working. And, there's just too much in there. He's a trader. I'm a trader. EAs will execute and are blunt instruments, which is why I say, the opening range breakout strategy, if you leave it as it is, backtesting, it all works. However, if you interfere with it, you can probably make more money out of the ORBEA when you see a whacking great hammer go in at that level and your TP is there. If you close the trade there and it comes down and the EA would have got a break even on it, but you actually made 1R, you make more money, which is why I always advocate every EA that you ever use should be supervised and should be a tool to help you execute your orders. It shouldn't be a sit on the beach, drink a Mai Tai, hope, because the backtesting that I've done on Tom's strategy proves it unprofitable. But I am using a fixed risk reward ratio, and I've used multiple fixed risk reward ratios, and they all come out roughly a little bit profitable, break even, or a loss. But that's because I'm not sitting there when I see an opportunity on a high volatile day, taking additional trades and making more money, which is what he's doing. And some days that hurts him badly. But the EA can't replicate that, can it? The EA can tell you what would have happened if you'd have taken that second 15-minute break with a stop under the low and you targeted 1.5R. And it could tell you what you'd done if you'd have trailed a stop, and it could have told you what you'd done if you'd moved stop to break even when you got to a certain point. You can get all that data out. Overall, I didn't find an edge. But that's me. You go test it. The opening range breakout EA will allow you to test every connotation of opening breakout strategies, basically. Anything you trade on any index that is a breakout strategy based on any time, the ORBEA can do it all. With any risk reward profile, any risk parameters, you can use fixed lots, percentage lots, you can change the distance of the stops, you can do anything you like. Go test. There's millions of profitable combinations. I've proven it. I've done 50,000 back tests with 50,000 different system parameter permutations, all profitable. Yeah. There's no one that's better than another because that's all what's happened in the past. I don't know what's happening today or tomorrow, do I? So you pick one and you go with it. It will be profitable long term. That's all you can do. But, everything works, everything doesn't. Peter, true story. It is 4 candle and 8:15 to 8:30. I'm just checking his not following. His DD is way too much for my guts. Yeah. So it's 8:15 to 8:30. So so that's your 5, 10, 15, 8:15. So 8:30. Yeah. So that is what he calls the school run strategy, isn't it? I've read it. I haven't I can't remember what it is because I don't trade it, but it's kind of, I think what that version of the strategy of the opening range strategy is kind of missing the whipsaw or missing the opening volatility. To me, that's the wrong thing to do because we know we get massive volatility at the open. And if it's going to be one of those days like it was on the NAS yesterday, you couldn't get in on the 15 to 30 minute range because the move was already finished. So you've missed it all, haven't you? Yeah. But some days when it goes like, when the open's like that, that's an amazing strategy. But you can take an inside bar break on those days, can't you? Which is basically what this is. Look, there's an inside bar break exactly today. There's one. That's an inside bar. There's your inside bar break short. Yeah, stop above the high. You are short now, roughly break even. There's a million ways to make money. At the end of the day, you're trading something that is completely random. The outcome of that candlestick there has absolutely nothing to do with the outcome of this candlestick. What happens is on this inside bar right there, you will go long or short and you will have a risk and a reward. As long as you stick to the risk and reward and the edge is there that these inside bar breaks work more than X% of the time, that is a profitable strategy. There will be days where it will go like that all day long and you will lose whatever you lose until you stop. And that's the difference, I think, between people like Tom and other traders. Tom stops. Tom goes, I'm down 60 points. I'm going, I've had enough. Other traders will sit there and go, I'm going to get that money back. And they'll double their risk. Those are the people that die. You've got to identify when the market conditions are wrong. And that's partly what I'm testing with this version of the EA. This version of the EA hasn't traded today because that was too close to the high. That range was too small. That range was too big. It's not conducive to trading. Look what's happened. Good job, EA. You identified that the market conditions weren't right. So we're not in, we're not out, we're not losing, we're not winning. Fine, we'll wait for this afternoon and we'll see what happens this afternoon. Yesterday, I traded the S&P because the conditions were right. I traded the Dow because the conditions were right. I didn't trade the NASDAQ because the conditions were wrong. That's the one that went and did an 8R. It's random. It's all random. This is the thing. Everybody's trying to find a system solution to calming or dominating a completely random set of events. It's physically impossible. There's no one on the planet that can predict the next candlestick on the DAX today. Nobody. Not even the banks. There's 10 banks now pressing buttons, injecting millions and millions of euros into the DAX in stocks. They can't even predict which way it's going to go because when they press the 25 million button short, they don't know what the other 9 banks are doing. If they're all pressing the 25 million button long, the bank that's pressed the short button is going to lose. They can't even predict the next candlestick. How the hell are you expected to? So you can't. You get in, you deal with it after you've got in. That's the important thing. And this is what position trading is all about. You press the button and you wait and see what happens. If it goes against you, you deal with it. But you don't take a loss. You deal with the trade. You're in a position. If my position is short on something, I'm short on something. I'm still short on it 3 weeks later because I'm short. But why take a loss? You have to take some losses, obviously, but yeah, it's all in the boot camp. I'm not going to go through the whole boot camp. It'll take 12 hours. Do you know anyone else on the internet that uses position trading strategies? I know Nick Shawn kind of does. I don't know. I don't look. Banks. Go and ask anybody. If you know anybody in banking, go and ask them how they trade. Go and ask how the banks trade. Banks. They're all on the internet. They've all got websites. Best way to position trade on a funded account is to treat the drawdown as the size of your account. Example, 200K funded account is equivalent to 20K account. And trade the drawdown. Yeah. Can do that, yeah. Just keep the risk small. That's the thing with position trading. There's a couple of new prop firms out there. Well, not a couple of prop firms that have changed their rules as well to 60 days now. 60 days, you can pass an evaluation position trading in 60 days if the conditions are right. If we're in a squeeze or something, you're never going to pass. But if the conditions are right, March, for example, this year, the ADR reversal set files for the market reversal at EA did over 20%. Conditions spot on. April, they weren't. So it's swings and roundabouts, isn't it? Have we ever tested on using fixed grid for scaling into position trading? Yep. Doesn't work. Grid trading is grid. There's two types of trading you should never ever do: martingale and grid. Those two strategies. If you see any EA, and you'll find a lot of EAs out there, they will say in their sales blurb, no martingale, no grid. You'll see it. You'll come across it, because grid trading and martingale is suicide long term. So I've built many testing models for ADR. Yeah. So ADR 100%, 125, 150, 175, 200, 225. If you stick a grid on that, right, and you go short there, with either the same size or a multiplier of any kind, and you do that on all of those, you'll have many days where it will do something like that, and then it will do that, and then it will come down, and you'll have an exit. But you will hit, I'm just explaining what a grid is, Burke. A grid is basically trades at levels. Yeah, so you set pending orders basically at every single one of those levels. Right? The days where you get 225 ADR straight up parabolic because there's a news event, you are 1, 2, 3, 4, 5, 6 shorts. That is in drawdown by 1 1/4 ADR. That is in drawdown by 1 ADR. That's in drawdown by 3/4 of an ADR. That's half an ADR. That's quarter of an ADR. That's break even. Your total drawdown there is going to be 3 to 5% of your account. Minimum, depending on what risk you're using. If you're using any kind of multiplier or martingale style strategy, you've either blown the account or you're in heavy, heavy, heavy drawdown. The next day, if that accumulates and then breaks to the upside, you're dead. Simple. Yeah. So grid trading strategies, again, they work fantastically. When they don't work fantastically, they blow your account. You're either in this to gamble, and if so, go to the casino, or you're in it to try and make a long-term reward on your risk, which is trading. Grid and martingale will always, always, always blow your account. I've built so many models on grid and martingale over the years. I've used pivot points. I've used ADR. I've used, lots of different types of pivot points. I've used support resistance. I've used percentage movement on account. I've used every combination of martingale, from small multipliers to proper martingale 2x multipliers. I have never found an EA that lasts more than a year, because at some point it will hit that run, like the yen, it will hit that run where you go ADR, ADR, nothing, ADR, ADR, ADR. Aussie, New Zealand, right? 8 ADR. Parabolic, right? This was an ADR hit. Yeah, so let's look at this as an example, because this is a perfect example of why you don't do it. So ADR on this is 70. That move there on that day was 180. So that's 225 ADR, right? So you had ADR orders like that in a grid. By the time you got there, you're in massive pain. Unlucky. You're dead. You're just dead. There's no other way around it. You're dead. You've blown your account. You've lost all of your money. And before you say, yeah, well, don't use 100 ADR, use 150 or 200. Fine, use 200. I don't care. You're still dead. Yeah. You will get a parabolic move against you at some point that will kill your account. And yes, you could scale out, but go on, scale out. Keep scaling out. You'll scale out for weeks until your account's blown. It doesn't work. It just does not work. Long term, it works short term. You pick the right instruments, it will work for weeks, it will work for months. And you see EAs and signals where they're going like 470% return in 4 months. And you're like, month 5, I'm going to try this. Oh, didn't work. Because they've backtested and curve fitted a strategy that works over a specific period of time and they know has a shelf life. They're not interested in selling you a strategy. They're interested in selling you an EA or renting you an EA or renting you a signal service or something that they keep selling over and over again. Anyway, we haven't done any analysis this morning. We've just been waffling because the DAX is not doing anything. Here we go. UK 100 is extremely extended on the hourly. I haven't got it on here. I have got it on E8. Have I? No, I haven't got the FTSE. Can't look at that one, Amy. Sorry. Peter, bless you for your kind patience with us all. Feel like a pupil in primary. Everybody's got to start somewhere. After 8 years trying and failing, it makes sense. Yeah. Well, you've been through exactly the same process as me, Peter. I traded for many, many years until I finally figured it out. And that's what I've put on the website. Everything you need to know, the 5 steps to becoming profitable, will open your eyes as to why you're system hopping. As soon as you identify your system hopping, you'll understand why you're system hopping. If you can understand why you're system hopping and you watch the bootcamp, it'll all suddenly make sense. I can't control this random thing. No one can. So everything I'm trying to do with every strategy I'm buying and every indicator I'm buying is trying to predict the future, which no one in the planet can do. As soon as you identify that you can't predict the future, you stop worrying about it and press the button and deal with it afterwards. As soon as you get into that mindset, everything becomes clear. Because as long as the market moves up and down, you will make money. All you've got to do is identify the most likely time, roughly within a few days, of when the market might turn around. That's it. Yeah? Because you can't predict when it's going to turn. You can get an idea roughly of when something might turn based on what it's always done in the past. That's it. That's literally it. And as soon as you can identify market structure and the fact that the market is extended and stretched, you know that after it's extended and stretched, you have a pullback at some point, but you never know when the pullback's coming because it's random. Can't put it any simpler than that. That's trading. The whole sell high, buy low thing that they said back in the 30s is exactly what the banks and institutions do. If something is coming down hard, they don't sell it, they buy it. Because when they've sold, they will buy back the other way. Yeah. And that's what relative strength tells you. The RSI indicator, relative strength indicator, tells you when there's been a strong move in one direction. That's when we start to buy it, and that's when we get out. Yeah. That's why it's used. One of the most underrated indicators on the planet. Everybody hates it because it's not accurate. When you suddenly remove accuracy, it becomes one of the best indicators in the world because it tells you when the market's stretched. I'm not trying to time the market. I'm trying to find a condition. That's the difference. I think that grid directional would be that much different from position trading aside from not waiting for the market reversal. No, grid is totally different, as I've just explained, Nathan, which hopefully you've understood. The difference between position trading, what I do, is massively different. I get into trades when the market is going in my direction. Yeah. So my EA and my strategy will not take a trade if there is not a break in structure. So if this thing goes down 300 ADR in 2 hours with no buyers, I won't take a trade. In a grid, you'll be in 6, 7, or 8 positions. I will be in 2 positions with an average in the middle of that drop, which the market will pull back into. That's the difference. Position trading is nothing like grid. totally different, as I've just explained, yeah? If this thing today, Aussie New Zealand, for example, goes parabolic for an hour, sits there, parabolic for an hour, sits there, parabolic for an hour, parabolic for the next hour, and gets to 225 ADR when there is no reversal alert, no break in structure, I will take one trade here and I will take a second trade when we do get that break in structure. When the sellers start to sell, I will get in. A grid trading system will be in there, and up here it will be sitting in 7% of drawdown on its account. I will be sitting in 0.5 to 1% with 2 trades on, and I've only got to get down to there to get out. And if it accumulates and breaks, I will have the next week or so to deal with that position. A grid trader will be dead tomorrow. A massive difference. I thought grid trading is position trading. No. Grids are set intervals. Yeah, very important. I never mentioned the word grid. Go and watch the bootcamp. I never mentioned the word grid in there any time. We take trades when the market is at a point that the guys we want are on our side. Yeah. This is the whole purpose of this indicator. This is why this indicator exists, the market reversal alerts. It's a reversal in structure. We have, if we want to buy, we buy when the banks buy. The banks buy, and the only way we can tell the banks are buying is when we've had a sustained push in the direction that we want to go, a reversal alert, or a retest, a W, an M. Yeah, that is a structure break in the direction that we want to trade in. Yeah. If you're just going to place pending orders in the market, it's just going to go through them, which you can do. And that's what I used to do before I had the market reversal alert CA. But the indicator is telling you that sellers have come in. Look, that's where the sellers started selling. That's where the buyers started buying. Yeah. That's when we get in. When the guys, when the banks, because if you want to go long, right, and you want the market to go up, who is going to make that happen for you? You? The 100 guys in your Telegram group, the 1,000 guys in your Discord channel, the 25 guys on the prop firm that are selling the signals, are they making? No, the banks. Every one of these candles takes millions of dollars to move. Yeah, you can't do anything about it. So wait until the banks have started to move it before you take your trade. If you take your trade before that, you know, if you take a trade because you get a bull candle, yeah. So if you took a trade on that candle, which was the first bull candle, well done. Brilliant. That massive move to the downside there, if you took a trade on that bull candle, it carried on going. Yeah. A bull candle in a downtrend doesn't mean the market's going up. What it means is some buyers have entered the market. When you get that bunch of buyers that started that move or tried to make that move, when we get back above the level they tried to start that, it means they were successful. A structure break has happened, a reversal in the sellers being in control to the buyers being in control. Yeah, that is a retest. So to get in the market, think of it like a train, right? Hurtling along a track. It takes a lot to stop that train. A better example is a ship, a tanker, right? To turn a tanker takes miles, right? If that thing wants to turn around, it can't just go, pull a handbrake, turn and go like that. It has to go like that. Yeah. And that will be like 5-10 miles it takes to turn one of those things, right? Same with the market. If you've got millions and millions and millions and millions of dollars selling into the market, to stop that, you need a lot more millions than the millions being pumped into it in one direction. That takes a lot of force. Usually the first time you try, it won't happen. So you fail and then you try again and then you succeed. But the force coming here is still very strong. So you will get pushed back, and it takes a lot more force to push the market back above that level, which is what a break in structure is. And this is why we look for these W patterns in the market. That arrow says that we've had the market push up, given us a reversal alert, the sellers have tried to continue, and the buyers have won. Brilliant. Buyers were buying. The sellers tried to enter the market. The buyers pushed back. The sellers won. Brilliant. We pushed down. The buyers tried to push back. The sellers won. Brilliant. That's what the retest arrow is. It completes. That's not a very good example. That's a great example. That's not a very good example, but that is still an end pattern reversal. We get in when that happens or that happens. We don't get in just because the market is going up. If the market's going up, it's going up. I think Tom Hurgard as well, he in his book, if you get his book, Best Loser Wins, great example in there of Northern Rock. When he was working in a brokerage, Northern Rock was collapsing and all of his customers were saying, oh yeah, buy it, it's really low. No, he said, no, it's coming down, they've got a problem. No, buy it, it's going to go up, it's getting lower. I can't get any lower, keep buying it. And he was like, no, it's going bankrupt, it's going to go to zero. And they were like, no, keep buying it, keep buying it, keep buying it. That's grid trading. Just keep buying it, keep averaging in until, it goes bankrupt. If you'd have waited for Northern Rock's share price to pump 2%, you would never have taken an entry because it didn't. It just collapsed. That's the difference between grid trading and position trading. If we don't get that signal to go back in the direction that we want the market to go in, we don't get in. That's what that does. It's a big difference. Oh, we're very educational today, aren't we? We haven't done any analysis at all yet. We should look at some analysis, shouldn't we? Peter, I'm going through your videos. You're my new Netflix. Oh, God. Amy, RSI 12. Again, any RSI will work. Any RSI works, doesn't it? It's just obviously you will get different results with different RSIs. There's, again, no right or wrong. Yeah, if you switch to an RSI 12, you're going to get a completely different result to an RSI 21. You're going to get a hell of a lot more signals. But go back and test. Yeah, that RSI 21 there, RSI 12 rather, still worked. It went a lot longer. You probably, if you're going to use a faster tuned indicator, you probably want a higher hit, I would say. But unless you've typed 12 and you meant to type 21, did you mean to type 21 then? In which case, that's fine. Afternoon, Astro. Morning, even. Mumo. I have a theory on the recent DAX run, which is killing my account, by the way. It's either the summer holidays, bank traders are busy having fun, or the moon cycle thing the guy was telling you about. It's not the moon cycle thing. And the banks are certainly not on summer holidays yet. We are just in a period of light volatility. Yesterday, look, I mean, yesterday was just hell. So the open was there. So you went short possibly on the pre-market, and that's your 5 minutes. So your 5 minute opening range break was long. You sat around in it all day and you got stopped out somewhere in the afternoon. Nothing you can do. You're going to get days like that. But this is where, and this is what kills traders, is over trading. When you get conditions like this, you have to just sit back and go, today isn't a trading day. I can't trade. If you lose twice and the market isn't giving you any indication of going anywhere, it's not going to go anywhere. How are you going to make money? The one thing you need as a trader is the market to move in a direction. If the market doesn't move in a direction, you can't make money, which is why I find it ludicrous when people say, oh, I've got this new EA, it's got a news filter, so it doesn't trade during the news. What you mean, when the market is moving at its fastest and hardest and the most profitable positions you could possibly get, you don't take trades. Okay. So when we get a 300% ADR move on FOMC, you don't trade. Well, so volatility is the only way you can make money as a trader. If the market hasn't got volatility, you can't make money. You have to trade in volatile times. When is this volatile? At the open. When is it calm? After the open. So when do you want to trade? When it opens, because after it opens, it goes quiet. So, it's just finding those times. And that's the difference with Forex, is Forex hasn't got an open. So you can't tell when it's going to move, can you? So you just have to get in when you get in and deal with it afterwards, because you can't tell which way it's going to go. DAX is just running down. So we are looking like the ORB short if you took it, which is there. If you've taken it short, you're on your way. That is if you're not using some kind of trading stop that's got you out. Me all right, morning? Amy, I meant RSI 21. Yeah, I thought you did. On the UK 100 is 12.03. The DAX is, because the DAX and the FTSE quite often go the same. Yeah, so here you go. The DAX as well is massively extended. So the FTSE and the DAX quite often will move very similarly. So we're massively extended, yeah? What happens when we get extended? Market goes the other way. Why? Because they've made a load of profit there. They need to take profit, which means they need to switch sides and become sellers. If you're a buyer, the only way you make money is by selling, yeah? If you buy, think of yourself as a market trader. If you buy a load of fruit, how are you going to make money? Selling the fruit. If you buy a load of stocks, how are you going to make money? Selling the stocks. Everybody that buys has to become a seller. So when there's been too many buyers in the market, they start to sell it. When there's been too many sellers in the market, they start to buy it. Not rocket science. It's exactly what you've been told. Day one, trading 101. First thing you get taught, buy low, sell high. Yeah, forget that. I'll spend 10 years looking for a system that is the holy grail that's going to make me a millionaire. No, that first thing they told you was right. You just ignored it. I wasn't in the live room for your thoughts on the moon cycle stuff. Hate to have you repeat yourself, but love to get your thoughts on it. Or is it just you talked about it? It was a joke. AZ, you're now going to tell me, aren't you, you believe in moon cycles and their effect on the Forex markets. Somebody asked me to develop at one point a EA based on moon cycles because they had found a strategy that was based on astronomy. I was as polite as I could possibly be in telling them that I didn't believe it would be profitable. Put it that way. But they were utterly relentless in their pursuit of me developing this EA. And I had to eventually say, really sorry, but if you don't shut up and go away, I'm just going to block you. Yeah, moon cycles. I might be totally wrong. There might be a load of millionaires out there going, full moon, half moon. I don't know. I certainly have never tried. Did I talk about oil and missed it? No, I haven't covered anything. I'm going to stop talking now because everybody keeps asking questions, which is great, but I do need to actually do some analysis. Otherwise, I'm going to be here all day. So oil, basically, yesterday we got more of a break. So that's where we bought last week. I got out there this week on Monday. OPEC yesterday, the Saudis basically said they would just back oil basically, which was slightly bullish. We had oil inventories as well yesterday, which rallied a little bit. So we've had a bit of a bull run. I don't know where it's going at the moment. It's not in a spot that I'm interested at all. So the reason we took this trade here was off of this support resistance bounce. I got out basically because there's a trend line that I knew they would sell at, which they did. I was worried about it coming back down. So I got out there and the bounce has just about made a new high. So previous 2-week high, previous month high, you've got that area there and then back up into, and this is the previous month's high, but that's the level I would look at, 150 ADR. So upside targets today, you've got that area, you've got within ADR last month's high and that high there at 150. So once it gets up to these areas, we're going to find out whether or not we're going to remain range bound. If so, there's your sales. And as I was saying about earlier, yeah, if you want a strategy to trade with a stop loss, Go short there. That doesn't work. Go short there. That doesn't work. Go short of the monthly high. Yeah, take those 3 trades. Yeah, with a 1.5 R or with a 2 R. I would take it with a 2 R. Using quarter of an ADR, half an ADR as a stop. One of those, I can guarantee you, and we'll look at this next week if you want. We can replay this. One of those will have worked, and you'll be in profit. I don't know which, but the market moves at support and resistance. The reason being is that is where it turned and they sold it last time. That is where it turned and they sold it before that. That is where it turned and they sold it before that. There's a reason the market turned and got sold there, because the banks and the institutions didn't want it to go higher. When it gets back to these levels, they will have set limit orders at these levels to do exactly the same. The only reason these limit orders will not trigger and work is if there are more banks and institutions who are happy for price to trade higher next time, and they will overrun those limit orders. But those banks that have done that get overrun, will not be taking a $25 million loss on their account. They will be doing the same thing at the next level, and they will wait because they can, because they've got pretty much unlimited funds. And this is why banks make money. And this is how they make money. So, those are the levels I'm looking at for targeting. So if we were, good example again of grid trading, yeah? If you were grid trading, you would place an entry there, an entry there, an entry there, an entry there, and an entry there. If this thing hits 150 ADR today, I will take a short. If it hits any of those levels and we get a reversal on M5, get in a short. Put stop above the high somewhere around about half an ADR or so. But that's basically what I can see happening. This hasn't held, this trend line. So that, and this is typical of trend lines and why trend lines don't work. Although you can see in this case, it did. But to have a trend line, you have to have 2 points. So by the time you get to the third point, that is often the one that works. In this case, we got a nice little push off of there and then it failed. So what's happened now is everybody's gone long and they will pull the market back to stop them out. And then everyone will go short thinking, oh, it's just a bit of a different trend line. And then they'll go long and go up to here somewhere. That's typically what happens on the trend line bounces, which is why they don't work. But I would be looking shorts up there somewhere. One of those levels. Somewhere, I don't know. But, this is why I say, if you use half an ADR as a stop loss, right? So let's say, for example, you bypass, today what we do is we push into there, we have a little bounce and we push through it. There's no reversal and it's just like nice, strong price action. They rally up, we get to this level, nothing much happens and it gets to ADR. You take a short at ADR, right, with half an ADR stop. Right, so wait for a reversal alert somewhere up here. Get in short. Half an ADR stop is up here somewhere. So in this case, I would probably say best to take maybe 3/4 of an ADR as a stop, because we've now got the fact that if this level doesn't hold, this level might hold. If you put your stop, if you get in here, right, and you put your stop just above that high and it pulls back and does that and puts in an uneven M pattern, stop hunt M, you're dead. Right? If it hits that level, comes off of it, pushes up, hits that level, and there's millions of limit orders sitting there and it just goes bang and gives you the M pattern there, you're still dead. Right? If you put your stop up there, if that doesn't work and that does work, you're absolutely fine. And it's only got to get down to a 50% retracement, which happens all the time, for you to hit TP at 1.5 to 2R. But what everybody does is they try and get in with one lot or 1% with a tiny little stop there, and the market just accumulates and then it drops. And again, this is all covered in the bootcamp. One of the reasons people fail. You put a stop loss in the market first. Second, you put it way too tight. Give the market room to breathe. It spends 58% of its time within ADR, going up and down. If you put your stop loss within that area, it's just going to go up and down all day long, and it's probably going to hit it. Put it outside of that area, you're not going to get it hit. So if you hit ADR and take an ADR reversal with a half an ADR stop, it's got to push up to 150 ADR. Only does that 12% of the year. It's not likely to get hit, is it? If it does get hit, Oh, well, never mind. But it's now at 150 ADR, so maybe take another short with another half an ADR, and hopefully that one will come down by 1.5. Yeah. Well, these percentages are on there. Those are the odds of it, or not the odds, the historical data shows that that's the percentage of times it exceeds those levels. 42% of the time it goes beyond ADR, which means that 58% of the time it spends its life in there. If you have a TP within ADR, you're going to hit it because it spends 58% of its time doing that and not going outside of those levels. When it does go outside of those levels, the odds reduce of it going any further because the market's exhausted, stretched, extended. So it has to pull back. And that's why the ADR reversals work, but not all the time. Maybe I should get a moon cycle bot and combine it with ADR. Maybe that's the solution, but I haven't found it yet. I don't know. Open to offers. Anyway, so that's oil. Moon cycle AI bot incoming, yeah. Grid trading, but your grids are support resistance lines. You could do that, yeah. So, but that's not grid trading, Philip. Right? A grid strategy, I mean, it's an interpretation, but I mean, a grid strategy, typically the definition of a grid strategy is orders placed at set intervals, which tend to be equidistant. So if you wanted to trade a grid strategy using support and resistance, yes, entry 1, entry 2, entry 3, that's a really bad support resistance line, but you get the message. 150 ADR. They're not the same distance. But what I would say is, yeah, fine, take that, but do not take it until you get signs of the trade going in your direction. So if you get to that level here and you do not get a reversal alert, do not take a trade because the market is accumulating. What comes after an accumulation? A break. What's your odds of the break going your way or the other way? 50%. So wait until the reversal alert. Now the odds are in your favor because the market has shown signs that the sellers are taking control. So you get in at that level. If that reversal alert doesn't hold and it's a fake move, take one here. If you get a reversal alert, if you don't and it flies straight through to 150, which is that other level, and it reversal alerts there, you're only having 2 positions. So your average is here and that's your exit minimum. If you've taken 3 positions, one there and one there, your average is going to be in a slightly different place. But the danger is you've now got drawdown on that one and drawdown on that one. So by the time you're here, your drawdown is higher, your risk is higher, your pain is higher. This is the problem with grids. If it does that, your pain is 4 times higher than if you'd just done that and that, which is bad, isn't it? Drawdown is what we all want to avoid, which is why the market reversal alerts EA takes trades on market reversal alerts only. If it moves 3 ADR and doesn't give a reversal alert, there's no trades. You're just in 3 ADR of drawdown on the first one. Then you take a second. You've got 1.5 ADR drop before you can actually get back to break even. But it's better than being in 5 positions needing exactly the same thing. Yeah, that's the difference. But grid trading at support resistance, absolutely brilliant. Yeah, I mean, there's nothing wrong with that at all. And again, you can use that as a prop strategy. So just take those trades manually. And this is what I do in my prop accounts. I take support resistance bounces on reversal alerts. And sometimes I will look at a trade like this one and I'll go, well, if we get to there today and we get a decent reversal alert, I'll take a trade. And I might take a second. But you've got to be very careful with some prop firms. If that position is higher than this position, they will class it as martingale and they won't let you do it. But if you take exactly the same lot size there as there, you should be okay with most. You need to read the rules. And then you just need an ADR reversal to get you out. Yeah. There's a million ways to make money. But the thing that will stop you out is your stop. Can I use the market reversal EA in 1-minute chart? You can if you want to commit suicide. Why would you want to trade the 1-minute chart? It's just complete algorithmic chop. How can you make money out of that? Absolutely no logic to it whatsoever. I wouldn't recommend it. Scalping time frame is 5 minutes. Even that is unreliable at best. The problem you'll find on the 1 minute chart is in high volatility conditions, there's a perfect example, right? So that was your reversal alert signal. Yeah. Look at what you missed. If you're going to trade 1 minute, use price action. Don't use market reversal alerts, because the market reversal alert will likely trigger way after your entry, way after the move. Because you're trading chop, just chop. And the chop, when it gets big, will be far too big. But on the 5 minute chart, that is smoothed out. And it's not even on the 5 minute chart, actually. It's not even smoothed out, is it? Still too choppy. I don't know anybody ever that's ever made money on the 1 minute time frame. Personally, people have said they have. People have told me they've made money on the 1 minute time frame using volatility indexes and everything with my indicators. They set up Telegram groups for it to trade with the market reversal alerts indicator on the VIX and all sorts of stuff. They go very, very quiet after a month or so because they get a lucky run and they go like, oh, I found the Holy Grail. And then all of a sudden it all blows and they go, what's next? Ooh, look at this indicator. It draws lines and arrows. And they run off in that direction. Because you're trading volume volatility, which is random. So you can't, there's no structure to it. This is a market structure indicator. There's no structure on the 1 minute chart. There is, but it's not reliable. Try it, Mark. Come back and tell me if you can get it working. I couldn't. But anyway, RSI, ADRs. Let's do some analysis, shall we? Because nothing's, I'm not in anything over there. So we need to do some analysis. Yens. So CAD Yen ADR, we've had a nice reversal off of it at the moment, but we are 2 days down. So you've good example, reversal alert. Yeah. So you had a reversal alert there on that candle. It's just been invalidated with an M pattern stop, a W pattern stop run. There's your second entry there, but you are fighting a 2 day solid drop on the yen pairs. So hard work maybe taking that, but you know, it's moved 21 pips, which is a quarter of an ADR after the reversal alert. So that one has kind of started to play out, but I'm not too keen on longing the yen at the moment. Euro yen, same thing. You've had the reversal alert all the way down there. So that was your entry. Yeah, there's your W pattern. But again, you are fighting this yen at the moment. The yen is well overdue. A nice pullback and profit take move. US dollar yen, same thing. So it's all starting to unravel. But I'd be very cautious about taking, I'm just going to protect that buy. So there's the market reversal alert EA, as you can see, is just taking a buy on that. Yeah, so this is an H1 RSI extension. So it's just taking that buy. I'm just protecting that with a break-even stop because I don't want to be in the trade. So that has obviously played out, but I'd be very careful about all of these yens. So we've been looking at the yen for ages, waiting for a profit take move. And we've been looking at this level. So the 145 level is what we drew on last week before we hit it, which was there, that orange line. That was the previous intervention level for the Japanese back in August, I think it was, last year. So they said, if we get to that level, we will be unhappy, we will intervene. Well, not in so many words, but that's what they did. We got to that level again, the 145, big round number. Market always reacts nicely at big round numbers most of the time. Got the reversal alert, M pattern, and we're now sitting in the end of the 4 day sideways after that reversal alert. So we've broken back down into this propulsion gap and filled it. We've left this propulsion gap in now. So if we're going to continue this breakout of this level, this is where I would expect the sellers to step back in and add to those positions. So we should be watching this like a hawk, looking for short entries. Same with all of these yens, basically. So New Zealand dollar yen, there's your reversal alert. We've broken that low. We've pulled back into that balance. This is what we need to break. This, yes, previous day's low, that level there. If we can break down below that level, that opens up the doors to come back down 225 ADR. New Zealand dollar yen's the only one that's actually managed to break out higher. The rest of them all got stuck in an accumulation. So pound yen, same thing. Stop losses. Yeah. Look at where I got stopped out yesterday. What can you do? That's what happens when you use stop loss. They stop you out. So we've got loads of propulsion gap targets to the downside on this. So all we've had is rally, accumulation, rally, accumulation, rally, accumulation, a little bit of a pullback, and then we've pushed up into big accumulation. We've started to push down. We've broken the low of the last sort of 3 or 4 days, and we're pushing up. So this area here, we need to act as resistance and rally back down. So we need another break back down there. Same with Euro yen. So we've broken the low. We're sitting back in this accumulation, rallying off at the moment. But this low here, I wouldn't want to push back above that area. So this propulsion gap, which is what broke that low from the previous day, that is where I would kind of look for bounce. Swiss yen, we just had the reversal alert on that. So that's what, 1, 2, 3, 4 days, broken the low. So we hit the low, which is there, bounced, broke it, tested it, looking for that to break. If that breaks, we're coming all the way back down into this low here. CAD yen, obvious break. Yeah, broke it, pushed. That's the new low. That's the propulsion gap. Test in there somewhere and drop. We will possibly come back up to those at some point, but it really depends how strong this yen is. We've had many times where we've thought this looks like it and it hasn't been. But the difference between this move and this move is this. Yeah. So this was a pullback in an uptrend. This is an accumulation break to the downside. So we know that false breakouts happen a lot. So there is still the possibility of this being a false breakout. So I'm not going to get greedy on these. However, if this is a strong profit take move getting underway, everybody that's been long from here or here is going to be getting out. And this thing, we get this climbing up the stairs, falling down the elevator shaft. It happens all the time. Within a day or two, we've undone at least 50% of that move. We get multiple ADR hits to the downside at the same time, or day after another. So that's all started. Aussie dollar yen, that one obviously is broken that level there. Yep. So we pushed up, resistance, broke it, support, broke it, resistance, basically back down to there. And if we break that level, we're going down lower. So again, market structure, looking, if you go up to the 4 hour, we've already had the break here. This is one of those that's obviously started to move down. So this level here is that 4 hour level. If that breaks, we're back down into the 2472 zone. The next resistance, support resistance level is here. There's literally nothing between that level and that level but air. So pull back down to the 72, and then obviously we'll see what happens. So there's lots and lots and lots of downside on these yens. But as I say, just because we've started doesn't mean it's going to happen. So I'm going to play it out today. I'm going to see what happens with, we've got some news coming in on the pound. I'm going to see what happens with the unemployment claims and the PMIs this afternoon for the US. There's a good chance that these will move the yen as well. So that could be a continuation. It could also be a reversal. So we'll see. But this account, because this is the EA account, that's the demo account that's running all trades. Obviously, it's massively overexposed on the yen. So I don't want to get too greedy with it, but equally, this could make an awful lot of profit. So we're up 9% on the month now. Don't forget, last month this ended 9.5 negative. We're basically flat now. So we're on the 6th of the month. We're back to basically break even for the last 2 months. So whatever profit goes in this month's is the profit for the last 2. So it'd be nice to get a big run on it, but don't get too greedy. You shouldn't be overexposed this much on the yen anyway, but I will do some more drawdown control with some of this profit. If we get a kind of whippy this afternoon like this and we're not going anywhere, I will probably do some more drawdown control and use some of that just to reduce this down and get out of some of this yen, because it's got too much exposure on. So there's your ADRs, RSIs. We've looked at Aussie dollar, New Zealand dollar. That's extended on the 4 hour. As you can see, it's only down to the 25. Well, it's just about to get the 25 level. It's down below the 30. So it is extended to the downside. We've had the last 12 hours of, well, probably more than that, just accumulating. So we have broken the lows. Don't know where it's going really, but be looking more for buys than sells. Other 4 hours, we've got euro pound extended to the downside. I'll be watching this low for a nice bounce. Obviously, we've got this low here, which is last week's low, which it's kind of had a little reaction to, but slammed straight through it. So that's the low I'd be looking at, which is the monthly and 2 week ago's low. Euro yen, we know about. Obviously, that's coming down for our RSI extension. The euro New Zealand, that's rejecting very nicely that previous low. So we've got this accumulation there. We broke, and that's basically acting as support. You've got another level there. So again, you know, if you're talking about grid trading, position trading, get in on this one. You've just had the reverse alert on M15. Oh, no, you haven't. Not yet. You've had it on M5. So you've just had the reverse alert on M5. So get in there if you want to take this long, and then plan your trade. So the next entry on this one, if you're in now, is going to be 129 pips to the downside. ADR on this is 138. So that is your obvious support. So take that, take a second, average. And if it hasn't done a profit take move on that entire drop, it hasn't had any profit take at all, look, on that. We'll be down here somewhere. That's going to be a pretty easy retracement back up into that propulsion, isn't it? Pound CAD, this one's also extended on the hourly. It's already played out, you've missed it. So just about extended on the hourly, but you've, oh no, you've literally just had it. Look. So bit of a whippy open there, but that's your 5 minute reversal alert right now. Market structure shifted back down to the downside. 4 hour out of that propulsion. This is where we previously rejected propulsion gap. So just watch this level here, this accumulation break. So that on the hourly, there'll be a propulsion gap there, which is that dotted line, which is the previous day's high. Yeah, so that propulsion gap there is the accumulation break. That's a good target, well within ADR. It's for a quick scalp, but obviously it's got much more downside targets to go as well. And New Zealand dollar CAD is also extended. Big extension to the upside on the hourly. It's embedded and stuck. This New Zealand dollar has really been rallying off the back of the Australian dollar news. And obviously we've had Canadian dollar not doing particularly well. So this has taken advantage, but that's extended on the hourly and extended on the 4 hourly as well. Again, we've got a nice resistance level coming up on the monthly, which is 150 ADR today, which will also be up above the 72. Hasn't profit taken all the way on that move. Similar to that. Yeah. So it's either going to profit take, pull back and rally in market structure. So it'll go low, high, higher low, higher high, or we'll get an A-shaped recovery, which will mean we are in a range. Either way, it's going to need to pull back. The other one I missed out was the CAD yen again, which is extended on the hourly. But, you know, it's the yen. We've been waiting for strength in this thing forever, and it's finally started to come. So don't be too keen to get out too fast. The only reason I've taken that one off was because it was about 8% profit. So needed it. That was the aggressive drawdown control position that was taken. So hopefully, though, we'll be pushing down into these propulsion gaps. That's the ultimate target back down here. Yeah, and that is still allowing the market to rally against the yen. So there's your low, high, higher low, higher high. So this is a 71.9 retracement that I'm targeting, which is kind of your, that would be nice, but unlikely. So there's your 71.9, which is a very deep retracement on a bull run. So if you've got market structure, to be able to put in a higher low, you can't pull back obviously 100% because that's a double bottom. So you have to pull back an amount. 38 is a shallow retracement. 50 is a normal retracement. 61.8 to 71.9 is a deep retracement. That's your 61.8, 79, that propulsion gap. So the buyers that kicked this move off there, added, broke again. They haven't retested or added that area. So think market participation with institutions being 3 months. Yeah, 12 weeks, 4 weeks to 12 weeks of movement is what they're looking at. When you look at the COT report, Commitment of Traders report, those are long-term speculative moves. So a pullback like that is just part of a 3-month cycle. So that's where we'll be potentially pulling back to. But a 50% retracement or a 38% retracement, anything less than a 38% retracement, I class as a flag. So a flag break is 23%. That's exactly where we are now. But flag breaks tend to be like that. This is not a flag. Some people call that a flag. I call that an accumulation or a balance. We've broken balance or broken accumulation to the downside. So that to me is the start of a bear move. A flag is a bullish signal. So that's a flag. That is what I would class as a shallow pullback in a trend. So, you know, that's the average. That's 200 ADR. That's these propulsion gaps here. So somewhere around here, I would be looking if they are going to continue to try and push this yen and sell the yen off. That's where I would anticipate them starting to move from. Look at all the others as well. You know, you can do this with the fib on everything. Really handy for market structure, fibs. Yeah, there's your 38. We haven't hit it yet. This is a flag. Break. So there's a lot of people going long here. Where are all their stops? There. If the market needs liquidity, where's it coming? Get their stops. It's all down here. If you're a smart money concept trader, that is. There you go. Anybody got anything else they want to look at? Gold's broken. Gold's stuck at the minute as well. US dollar's stuck, gold's stuck. You know, it's just, it's a US dollar cross. So got upside targets and downside targets on this. Whether this goes up or down today is going to depend on what happens with the unemployment figures this afternoon. So, and the PMIs. Certainly looks a little bullish at the moment though, doesn't it? Which means weakness in the US dollar. So looks like a good buy if we get negative figures this afternoon. That's all I've got for you this morning. It's been a long session. Nearly 10 o'clock. 2 hours-ish. So I will be back this afternoon at 2:20. and obviously back tomorrow morning, 7:50. Been monitoring these yens. See what happens today. So at the moment, we are bearish. But obviously, we are not out of the woods yet on these yens. So we'll see if we get any more strength. There's been no more movement from Suzuki or anybody overnight. There's been no mentions of intervention. So they seem happy with the current price action. So hopefully the market is just going to listen and continue to do what it's doing. We had some news come in. UK June decision maker, year ahead CPI expectation 5.7. Jeez. So UK reckons it's going to be down to 5.7 from 8.7, 3% drop in the next year. Interest rates looking at being 6.25 to 6.5 in the UK as a forecast. So if you've got a mortgage, so yeah, it's going to take that to get that down. So big drop, but that is in a year. 3-year output price 5.3. UK firms June price expectation. UK firms June price expectations is the lowest since February 2022. So GDP drop by the looks of things. That's not good. We're at 0.1. So not quite in recession yet, but we're on the cusp, aren't we? So scary biscuits moving forward. Don't know why I said scary biscuits. Doesn't make any sense at all, does it? Right, I'll leave it there. Anybody got anything else they need, let me know in Telegram. I will be in there. If you've got any questions about the EA, the indicators, etc., etc. If you're in the DAX, well done. Unlucky. Just not very good today, is it? Very whippy, very up, down, very nasty. So we'll see if we can get some better movement off the US indices this afternoon. But watch those levels. That ADR, if we get an ADR drop today, that's a really good spot to buy from. We've got the gap fills to do, don't forget. So if we can get down to ADR any point today, I will be doing a buy on my prop counts with a nice little stop, quarter, third of an ADR, and just hold, multi-day hold back up into here. If this is going to continue to the downside, again, think pull back 50%. If it's going to go up, let it go. But yeah, so watch that level today. Doesn't seem to be able to make its mind up what it wants to do. So not a very good session on the DAX today. Unless you took the 5-minute pre, then you're probably all right. All right, have a good one. Anybody needs anything, I'll be in Telegram. Back 2:20 this afternoon, back 7:50 tomorrow morning as usual. Good luck today, and I will see you guys later. Have a good day.